right, welcome back. And Tony, I'm sure you saw this. Gold price could triple if the 1970s bull market pattern holds, says one person who's looking at it. He said, I went back and I looked at the 1970s, and I've been doing a lot of this, the 1973 OPEC oil embargo, and how is the 2026 Trump oil embargo very much like this and what is happening with gold? And he said, they're lining up exactly. He said there's like a 95% correlation, even to the extent that as gold started taking off and then it drops right about the same point that we've seen right now. What about that?
That's a really interesting correlation. And, it's funny. If you look at all the factors, the economic factors that, gold crashed basically in the last 48 hours with just major downturns from where we were just a few months ago. And this was, I think, this is the selling off and the consequences of data that has emerged. And it's interesting, if you reverse engineer this, it's really ridiculous. So you see the headlines yesterday was like all the CPI data, and the inflation's worse than all the experts thought. And so all of that is translating into, well, the central banks are going to either hold or raise rates. So the European Central Bank went up 25 basis points, David. And so the market said, well, then gold's in a bear market and we're going to sell off. Well, let's think about that. That means that the central banks know that inflation is so bad that they're going to have to either maintain or raise rates. But if they address the economic consequences, they're going to have to lower rates and expand the currency supply. So that's inflation. So either way, it's inflation. So it makes the price of gold go down.
Yeah,
that's just basically insanity at some point. So I watched all these numbers and I said, I'm going to back the truck up. So even in all liquidity that I had yesterday, I was just watching the trades.
Yeah.
And I'm locking in trades with the trading floor and just pulling anything that I had that was liquid, I was putting into gold. Because again, think about what that says. It's like inflation is so bad that the central banks are going to have to do something about it, which they really can't. And you and I both know this, because if you read that article that you're talking about, correlating to the 1970s and what happened to gold from 71 to 79, there was, the issue of us going off the gold standard. But if you look at the world today, and he mentioned all the currencies are fiat. So back then, we started that movement. That was us. That was Nixon in 71. We led the charge to take the rest of the world into the fiat currency system. The last one to leave the metallic backing system was the Swiss in 2002.
Yeah.
So everything is linked up, and there's 56 or 57 times more currency on Earth today than there was in 1980. So it's a massive, increase in the money supply. So all of that to go back to say, you see a lowering of the gold prices and a sell-off based off the fact that they're literally facing an existential crisis because of inflation. So that makes no sense. But that's how irrational the markets are. The markets are completely irrational, David. And I think that's good for all of us, because if you and I know that the fundamentals and everything that we talk about when I come on weekly is that, look, central bank gold buying, 36,000 tons of gold held by central banks. The last time that was that high was Bretton Woods in 1944, David. So, I mean, it makes
They know
no
what's
sense.
happening. They know that we're in a fourth turning type of situation like this. They understand. You talk about the fact the inflation numbers were higher than they expected. And yet when you look at the core inflation, the core CPI, it excludes food and energy. How can you justify that? That's what's the two things that are exploding. We're going to ignore those two things, and yet still, even throwing those out, inflation was higher than they'd expected. And then when you look at other things, you talked about the central banks. He said, that is something that is different as well. He said, the central bank holdings and what they were doing in terms of buying and selling was very different. They don't have any wiggle room. There's really not anything they can do, because right now, our federal government's debt is 80 times larger than it was at that point in time. At that point in time, it was $500 billion. Now we're closing in on $40 trillion. And so when you look at the leverage that the Federal Reserve has, they don't have any leverage. Paul Volcker went in and he raised the interest rate up to 20% coming from the Fed at one point. They don't have that kind of ability anymore because they have so much money that they have to pay as interest on the debt. That's one of the reasons why Trump is so adamant that they've got to cut interest rates, is so that he can make the payments. How would they make the payments if they were to raise the interest rates by 5 to 6 times, right? Because right now the interest payments are about as big as our bloated defense budget, our record defense budget. So where are they going to get the money for another 5 or 6 Pentagon budgets just overnight? Of course, they can't do that. They would have to borrow it. If they borrow it, more money like that kind of magnitude in order to pay off the debt, that doesn't make any sense. Nobody's going to make that kind of a loan to them. And it just put us in a death spiral if they did.
Yeah, currency creation is debt.
Yeah.
And, you grew up around this. We used to have discussions on budgetary matters and the deficit. That used to be a thing. I mean, politically. Like, it used to be talked about. There used to be, it was a subject matter that was discussed and worried about. And I think it was like muscle memory from a time when we did have a monetary discipline, or at least the semblance of one, from, let's say, from 45 to 71. I mean, it was still talked about. I mean, that was the history of the United States. We had budgetary concerns, and there was muscle memory for a long time. They stopped doing that after a while. I mean, I think the peak time was probably the 90s and then it started to trail off after that. And you had people like Ron Paul talk about, now it's just a free for all. And you mentioned the pump.fun deal. And I've talked about this, like the meme coins. It really is a symptom of a disease of fake, if you really want to get like philosophical about money and what fiat currency has created, it's so degenerate. Like, it creates and people, I mean, at the end of the day, they're trying to grow their whatever their wealth is. They're gambling because so many things are blocking us from actually having real production and wealth and prosperity. And the main thing is just the uncertainty of the currency. I mean, when you were a kid, there wasn't commercials on investing. Like, there wasn't, not every 5 commercials, it's like if you're Fox News or one of the cable networks, is going to be about whatever investment product or whatever. There wasn't IRAs, there wasn't 401ks, there wasn't any of those things until the mid 70s. And that was because we had such bad runaway inflation after we went off the gold standard. Everybody knew, anybody in the know understood what was going to happen with the dollar after you did that. That where we are now is just, it's worlds away.
Again, you look at this pump.fun, and to me, it kind of encapsulates what's wrong with all this technocracy and these guys who've gotten ridiculously rich off of this stuff. A bunch of people, I don't know how old they are, but they act like they're a bunch of spoiled teenagers. You're going to pay poor people to humiliate themselves and put tattoos on their heads, and you can't even get the words that you want on their forehead right. I mean, that's that's the most amazing thing about it. A bunch of spoiled rich kids who can't even spell the word correctly, right? They don't even care. And then they take that mistake and they pump that up to a fortune. It's just amazing. They just keep getting away with it over and over again. You're talking about muscle memory of when budgets mattered and that type of thing. I remember when I was a kid back in the early 1960s, and I'd watch Senator Everett Dirksen. And this was a guy who sounded, with every statement that he made, he sounded like it was his last breath. He's always breathless. Well, he was the one who said $1 billion here and $1 billion there. Pretty soon you're talking about real money. He was a real fiscal hawk. He's about the last one I remember. And I think he does, he took his last breath, and we haven't had anybody like him since then.
No. And that's, again, it's like a throwback. Nobody talks about it anymore. But if you just really if you look at the mathematics and debt to GDP, it's interesting. I think in when you were a kid, the 1960s, about 35% of debt to gross domestic product. And that's pretty steady throughout U.S. history, sometimes 20, 30. World War II obviously spiked. World War II was a big spike. It was about 120, but it went back down. And you look at the debt, but then you look at the numbers. You say, well, what was the actual debt total? You mentioned earlier, like the beginning of the 70s, it was like $500 billion, right? Then you get to the end of the 70s, it's $1 trillion. Oh, okay, well, you're at 1 trillion, so it takes you 200 years to get there. I was just reading the article and a little blurb on Gold Telegraph, and it's 39 trillion at this point. And you've talked about it hitting 40 probably this year. I think that's
I think it'll hit in the fall if you look at it.
Yeah,
I calculate out how fast it was going up, and I don't see it slowing down in terms of rate increase. It's going to hit sometime in September, I predict, because I don't think they're going to slow down any of this stuff. It truly is amazing.
Yeah, there's no fixing that, and the debt isn't real. It's not that we have to wrestle with who we owe. We bankrupted ourselves. I mean, basically, at the end of the day, we create inside. The calls are coming from inside the house. It's an inside job. But the numbers don't lie. I mean, there's liars use numbers. The numbers are out there. The math is just what it is, and so you can all this temporary stuff. And it's funny because I follow gold, silver, Bitcoin every single day, all throughout the day. It's funny. It's like they just pronounce the death of things. Oh, I guess the gold and silver bull runs over. I mean, it must, what a fluke that was, and I'm thinking, okay, but at the end of the day, I mean, what's going on with your currency? It's not like it's not a static thing. It doesn't have stasis. It just doesn't stay in the same place. And if you look at what they're going to have to do, David, I mean, at the end, they can talk about being hawks all they want on interest rates, but if you see,
it's a joke.
Like the true economic data, like the average American, like I've seen people send me stuff. They're like, look at these videos of people at the grocery store, putting things back, and like I can't really afford that extra thing of coffee. I can't afford, the name brand condiments or whatever. Like it's just crazy that there's so much happening with the pundits are saying we're in this the economy's doing great or whatever, and you just look at the real data and what's happening to actual Americans. They can't afford things. I mean, I see that in my business. I'm on the front lines of what's wrong with our currency and what's wrong with the system. It's not well, and the gas prices certainly are leading the charge. But all of that was there before. I mean, some of this stuff that's saying that the data on inflation is as worse as it's been since 22. Well, how did we get there in 22 in the first place? The consequences of what, even going back to the lockdowns, the consequences are still not fully in play from what happened then, let alone now. Right. Even the energy stuff, David. So,
and as Jeffrey Tucker pointed out, he said, we have had almost every quarter since 2020, we have been in a recession. And he goes, or negative growth or whatever. And so he says, typically it's like 2 or 3 quarters in a row that's recession. Well, we passed that a long time ago. And that is the initial shock that Trump gave to everything. This article, it was an interview with Jeff Clark. He's publisher of the Gold Advisor. And he said, I charted the correlation between our current gold bull market and the one from the 1976 to the peak in 1980. He said, believe it or not, the correlation coefficient between these two bull markets is 95%. And there's a reason for that. When you look at all this, what Trump has done to energy is really worse than what happened with OPEC in 1973. I've been saying this from the very beginning, and that kind of price inflation is baked into it. And yet what they do, they exclude that. They exclude energy. They exclude food. And it's not just the economy stupid. It's energy and food prices stupid. And it's stupid to exclude that stuff. People are stupid to believe the CPI numbers that they put out when they exclude that. He said at this particular period in the 1970s, bull market, gold crashed. It crashed and then it immediately rebounded. And I guess that's happening now. He said, gold is crashing. We're matching it. It's almost tick for tick alignment between what happened in the 1970s. He said if the correlation continues to hold, gold would have to nearly triple from current levels to match the full magnitude of what happened from 1976 to 1980. And again, all of that was set in motion by the OPEC oil embargo and the energy spike that happened in that. So it is interesting. He said the decline remains smaller than the 30% correction that happened in the 2008 financial crisis or the 28% drop during the 2020 pandemic shock. And so, he's making like you said, you back the truck up when you saw this price happen. It is, when you look at the long-term trends, there's not a single thing that has changed except to get worse. We look at all the fundamentals that are there. He also questioned how aggressively the Fed can tighten monetary policy. And again, he said they can't afford to tighten it that much. When you look at what Paul Volcker did, as I said, he raised the interest rates to 20%. Right now, the Fed's interest rate is 3.5%. They can't do that. They would not be able to make the payments on the $40 trillion debt because, like I said before, it was only $500 billion at that point in time. Now it is $40 trillion, 80 times larger. It's just insane. The numbers are astronomical. It's hard to get a grasp on them. You can only understand a little bit about what is happening, the magnitude of the problem, if you look at it comparatively to what was there before.
Well, I think the difference, and I agree with the thesis, I think a lot of the correlations add up between this 1970s with stagflation and the OPEC oil embargo and all of that, and even just the free fall from going off the Bretton Woods Agreement and going off the gold standard. I believe all of that correlates, except it's worse. Mm-hmm. Because, if you look at the chart, you look at the history, and we hit 1980, the things that Paul Volcker did worked. I mean, it at least in theory, right? They worked for the time. He raised interest rates. You say take it to the teens or to 20%, and it contracted the money supply and it stabilized inflation. Of course, the debt was only $1 trillion, and we were still the hegemonic, dominant monetary power in the world, and so it did for a while stop things, and gold went down and silver crashed and all of that, and then there was the tech boom of the 80s and Reaganomics and Art Laffer and the Laffer curve, all that stuff. There was a temporary. But there's not going to be a Laffer curve. There's not going to be Reaganomics. There's not when this ends, David, like that cycle or whatever, if the correlation goes to from 76 to 80 in our timeline, let's say we're going to take it to 2030, there's nothing after that. Like it's just more debt. And there's not like you add in AI, which AI has sucked, a lot of the liquidity out of the room, gone from Bitcoin and other places. Yeah. Oil right now is doing a very similar job. People are chasing the fastest horse in the race. Are trying to get behind that.
And the daily speculation about what Trump is going to do with the war. That's the most amazing,
right?
Yeah.
And the schizophrenia of that. And so I just look at the metrics and I go, okay, well, I'm bullish on real hard assets. I'm bullish on commodities simply because there's no escaping the damage done in this, and even the article includes it. It's all the currencies on earth.
Yeah.
Are fiat.
That's right.
And so they have to debase themselves. And so even if, Jerome Powell raised interest rates faster than Paul Volcker, he raised them faster, but he only raised them 25 basis points at a time, where Paul Volcker was going, from, 5%, 7, 10, he was going up. He did it. Jerome Powell did it faster, but you're right. It's like to really wrangle in the amount of monetary debasement that's been done is impossible. Mm-hmm. They're not going to be able to do that because eventually they're going to look around and they're going to be faced with a crisis of, a collapsing economy. They're going to have to promise liquidity injections, which is, again, the irrationality of I'm looking at the screen right now. Gold's at 4,076 an ounce, which is still mind-blowing to me coming from everything when I've worked around gold when it was $1,200 an ounce or less. So it's mind-bending to me. However, the market will tell you that we're, gold's selling off and we're in a bear market because of that data. Because inflation's so bad, gold went down. Okay, let me see if I can process that. But that's the irrationality of the market. That's why when I just know long term and looking at everything that's happening, you're not hurting yourself owning physical precious metals in the face of this. I don't care what any commentator says.
I look at this and it's absolutely. Here's another article: Gold market exhales as U.S. CPI rises roughly in line with expectations. Yeah, it went up. It went up faster than they thought, but it's not that far out of line. It's like, but you cooked all the data. I'm looking at this and I read this. I told Karen, I said, I feel like the two guys in The Big Short, the Christian Bale character and the Steve Carell character, they're looking at this and go, how are they getting away with this? They're just lying to people. How do they get away with this kind of stuff? when you look at the inflation numbers and you look at the way people are reacting to all this stuff, it is just as irrational as what we saw with the 2008 crash. It absolutely is.
Yeah, I mean, it's a meme coin economy, David. Not understanding fundamentals or what economics. I mean, it's supply and demand is a big thing, and then looking at the market, and that's why I'm not in the standard market, and I don't have that expertise there. I'm pretty myopic. I stay in my lane of commodities, gold, silver, Bitcoin. That's what I do. But if you look at the market, they're all overpriced, overvalued, and then if you take out AI from like the top seven, the market is garbage. I mean, if you really look at it, it's not built on anything. And I think that's a fundamental problem coming back to the issue of our currency and the type of economy that we have. It's irrational. It doesn't make any sense. But on a long enough timeline, even the irrational has to correct. And that's why we saw $5,600 gold in the last 90 days, or is it 90 days? Maybe going back to January. I forget what month it is sometimes. But you go back, it's this year for sure. You go back, especially, when the war kicked off and it jumped, and then there was that big oil sell-off. A lot of this stuff, I mean, you're just looking at gold and silver are at discount rates right now. Yeah. This is discount bargain land. And I don't know, maybe you find a further floor on this. I'm not exactly sure. I pulled like major price predictions from the institutions. The bullish case for gold right now is like 6,000 in the next 12 months. And the bearish case is 4,800. Like, so, same thing with silver. The bearish case for silver is like 75. And then the upside is like, most bullish case is 125. I don't know. Somewhere in there is probably the right number, but it doesn't really even matter because at the end of the day, those currencies that are going to have to debase themselves. I mean, they can raise rates all they want in the interim, but they're going to be forced to have to do something to pull their economies out of the abyss. Like there's nothing that's going to stop that. There's a reckoning that's going to have to happen because of the economic damage that's been done just from high energy prices, David.
Yeah. Well, you look at the securitization thing again, and you got these guys who are looking at it, say, this is absolute garbage. There's no value here. How did they keep growing this? And that was the thing. The one guy, he nearly crashed out because people were losing confidence. He was buying these shorts and having to maintain them and keep pouring money in there to sustain them. And it was bleeding him. And it's like, how hasn't this house of cards collapsed already? This makes absolutely no sense. And so when you look at it, Zero Hedge has got an article. They talk about trading versus investing. And they said traders, whether they are skilled or unskilled, tend to track near-term signals for immediate rates of return. So, what did Trump say today? That type of thing. While longer-term investors are typically watching history, debt cycles, currency debasement, and they do it with a patient detachment. Since 2000, gold has outperformed the S&P when compared against the major global paper currencies that are down 94% since 2000. Gold is up 1,580% since 2000, has demonstrably outperformed fiat quote-unquote money. And so the reality is that even the banks, they point out, understand what is happening here. But the fundamentals of history, economics, and therefore currency debasement confirm a clear pattern by desperately broken nations to inflate their way out of debt at the expense of their currencies. Again, they're always going to try to monetize it. That's what Trump is desperate to do. And it's not just because he needs to pay the debt, but that's a big part of it. And so he's going to be pedal to the metal for this inflation. It's going to happen one way or the other because of what he's doing with oil and energy prices. They can ignore it in their statistics, but the reality is something that is completely different. And the more they lie to us, the bigger the adjustment is going to be when people start to bring this thing back in alignment with reality. It's just a measure of corruption, actually.
Yeah, it's interesting the perception that the average person has too when they look at the financial world or they look at the monetary systems. I see something different than if I watch, MSNBC or one of the or Fox Business or whatever, or CNBC. I look at what's actually happening with the infrastructure. If you look at like the metrics when we talk about gold surpassing treasuries, and then we talk about gold surpassing the dollar is the most held reserve asset by central banks and other things. But they're actually, the building out of the infrastructure to have physical gold be the trading commodity or currency for the rest of the world. Meanwhile, the dollar continues to lose market share and usage daily. I mean, it's not something like it's not something that's going to go in the other direction. The dollar is still used widely in the world, but it's every day there's a lot less usage, right? And just countries dumping the dollar, getting into the gold holdings. It's not like even no other currencies replacing it. Even the supposed currency that was going to come out from the BRICS nations, the BRICS were supposedly going to have a current. I didn't think so, but this is what a lot of people thought. They were going to have a unifying currency. No, it's gold. It's already there. And so if you're just looking at that, just that alone, knowing that the IMF is warning that U.S. debt is no longer attractive. It's losing the credibility. I mean, we're doing that. We're losing credibility at a rapid rate right now because of this administration. Not that any administration's been great, but this is pretty bad. I mean, we're losing credibility left and right, and there's no certainty at all. So markets love that. So the entire global system, to me, is reacting kind of in an immune system way against that uncertainty, and it's going back to what has always been stable. Gold wins out. I mean, you can cover it up, you can have the fake prosperity and all the rest, but at the end of the day, it's coming back, and I think they're running back to it. Actually, I mean, it's faster than I thought possible. Even looking at the stories that pop up about Hong Kong, and I know I mention this all the time, but it's just, I think it's probably one of the most important things to watch, because the resetting of the global monetary system back to gold is a choice that these countries are making. They're making the decision to do it, and it's a conscious decision. That's and right. It'll have major ramifications on our ability to borrow or print or just expand and debase. I mean, we'll do it. It's going to happen. We're going to do it further. There'll be more dollars in the market because we're going to make them. I mean, don't get fooled by, inflation data is really high, so we're going to keep rates the way they are or raise them. Well, fine, you might for a little while, but you always be forced at the end of the day to print. They're going to do quantitative easing. They're going to lower rates because it's either that or they have, Mad Max. Okay. At the end of the day, they're going to print, folks. I mean, it's not a question of if, it's when.
And all the stuff about interest rates, when we talk about this, Gerald Celente will always say, that's nonsense. When you look at even their rigged inflation numbers, the types of movements that they're talking about in interest rates, that's not going to do anything at all. I mean, unless you're to do something like Volcker did, go up to 20% or something, you're not going to have any real interest rates. And, I guess as you're talking about, we've lost all of our credibility. Maybe they need to change MAGA to MACA, Make America Credible Again. I think we're going to have a difference in regime change up there for that. But here's some numbers, for example. You're talking about how when we weaponize the financial system, that was a shot in the arm to BRICS doing things. And of course, since that happened in 2022, central bank gold purchasing has increased by 5-fold. And when you look at what is happening today versus 1970s, central banks around the world were selling gold back then. But right now, except for Turkey, central banks are not really selling gold. They're still buying gold. You have central banks from Poland to Asia are net buyers of gold. And the reason for that goes back to what Biden was doing. It's surprising to see that nobody in the Republican press is trying to blame Biden for that. It's because Trump is going down the same path and doing things even worse than Biden, I guess.
Well, it's true. I mean, weaponization of the dollar has been U.S. policy now for the last 50 years. And before that, it was about using our standing to further strengthen the dollar by world usage. We were the world's reserve currency. That was one of the reasons our standing was so strong. We were able to go off the gold standard and break our own agreement and still hold and maintain supremacy. that's how strong the dollar was, or at least the perception of the strength of the dollar. So we don't have that anymore. We've ruined that. I mean, even accelerating after the fall of the Berlin Wall and the fall of communism, or fall of the Soviet Union. Communism is alive and well, but the fall,
and Washington
fall of the Soviet, very much so. McCarthy was right. But we lost all credibility. Made the neocon experiments and the Crusades and the rampant Zionism, all that stuff. I mean, that has accelerated. It didn't have to be that way. We could have, I think we could have maintained a long time, even with the fiat currency, but we debased things, and we, weaponized the dollar, the sanctions, all that. So the world just built an immune system around. I think that's what BRICS is all about. That's the moving away from the dollar into gold. And I think that, if you look at central bank gold holding, David, it's clearly an indicator that I think these countries are going to remonetize, reset their own currencies to gold, or do something like that. Because you have in a reset, this is the opportunity they have to go back to a stable condition, because a fiat world has created massive chaos. I mean, we're living in a meme coin casino economy worldwide, and it'll make you. Maybe the Fed will come out and you can get tattoos on your forehead or something like that. We'll do Fed.fun. How about somebody get Fed.fun, and you could have what the meme coin extension of that into our central banking. I think
what they're going to do is they're going to have like a virtual tattoo on you. That'll be your biometric face ID. Your permission to do everything is like, here's my.
You get your QR code on your forehead.
That's right. We got a couple of comments here. Footstep 77 says, Tony, do you know the Federal Reserve will be no more in exchange for no taxes to transfer to CBDC coming soon? That's kind of I don't know if that's a question or a comment there, but yeah, I think that actually in the U.S. they're going to do a little bit of a head fake. I think instead of going to CBDC, I think they're going to go to stable coins, because that's going to be money for the crooks in Washington. They get to participate in it. If they did the Federal Reserve, you've got people like Lutnick and Trump going to be left out of that, but they can wet their beaks if they put in a stable coin.
Yeah, and you got to look at like the dynastic families that set up the Creature from Jekyll Island. You read G. Edward Griffin's great book. If you look at like the Mellons and the Rockefellers and the Rothschilds and all the people that set up, like, those are dynastic families, and their power may be, even though they have like holdings and they may not have the influence, or it may be a controlled demolition to get rid of the Fed and transition into stable coin. They're going to have to do something. I mean, it's not doing nothing and just holding the current position. You're going to have a real problem with currency debasement. So they have to have a boogeyman. It'll probably be like Iran or Russia or something. Somebody else did it to us. What was it? Putin's price hike. Remember that through the Biden administration? It was Putin's price hike.
That's right.
The reason you had inflation, right?
Putin did it. Yeah.
Putin did it, right? It's so funny. But yeah, I think that's what to watch. I mean, what is it? Zygmunt Brzezinski talked about an end run around sovereignty. And I think there's do an end run around the currency.
To me, the stablecoin looks like the perfect solution for them. It's about as corrupt and a biggest lie that you can come up with. It's not stable. It's not a coin. It is a digital currency, but they don't call it a digital currency because they don't want you to catch on. And it's not going to be the central bank. It's going to be crony capitalism and kind of fascism, corruption, that type of thing. So I think that's the direction that they're going to go. It also gives them all the capabilities of the CBDC in terms of being able to track you and to set up all of your financial dealings on a permission basis. Dougallug said the gold backs are great, aren't they? They make good tips and gifts. I agree. I think that is real. We talked about that last week when you were on. I think that really is going to explode the people who are making that. That's going to be huge, I think.
Yeah. The interesting part about goldbacks is the system they've created. And actually, one of their executives came down and visited with me in person here in Texas, and they're real gracious. And they set me, because they noticed I was buying so many goldbacks over the years, and we put them in wolf packs. So yeah, they really explained to me what their goal is, and it's using them as currency. It's not, I mean, they're using them as an exchange in real time, what each goldback is worth. And it's a stable fixed set, whether it's a quarter or whether it's a 10 or a 50 goldback. You just multiply it by the one. So you know what a one goldback is, and you just either divide or multiply. And it's really interesting. We need to work. I think we need to get a conversion chart on our website, and that's a good reminder. I need to do that for goldbacks. But yeah, in 5 years,
and they've got an app for
will
that,
be a lot more ubiquitous.
There's an app for that, isn't there?
Yes, Goldback has it on their website. I need to put. They offered to help me put it up on mine too, so I need to do that.
Yeah, so you just look up the whatever the current. They convert it over for the current price of gold, and so there's your objective standard for doing that, and that gets around all the requirements that people have in terms of, well, how do I know if I'm going to just accept physical gold for payment somewhere? How do I verify that? If I'm not a gold dealer or something, I don't know if this is a genuine coin or something like that. And how do I, am I going to weigh this stuff when I'm there? Well, if you got a Goldback, that takes care of it. You got that app that tells you what the current price of gold is and how that translates to X number of Goldbacks. Real Jason Barker, good to see you, Jason. Again, Knights of the Storm, you can find them. Tony's going to be having a program right after this one today, and on Twitter and on Rumble. And of course, you can find Jason Barker and Knights of the Storm. You can find they have a listing there of a lot of different programs. This one is on there, but a lot of them. Guard Goldsmith is on there. Many other like-minded people who are not trying to game you for audience. They're going to give you their honest opinion. Yes. And so, Jason Barker says, I think of it like gold and silver are on sale right now. I agree, absolutely. He says stable coins are going to be backed by other crypto, which are valued in the dollar. It is a circular firing squad. Well, it's going to be something going to make a lot of money on. And of course, you got Jared going around to the Saudis and many of these people in the Middle East and setting up deals with them. I want to stay as far away from that crowd as I can. So yeah, absolutely. And then we don't have any more comments or questions for you. Anything you want to tell us about what is going on other than a massive sale on gold right now, I guess?
Well, it's a massive sale. And yesterday it was a good opportunity. I've been waiting. I'd had some reserves set aside. I'm talking about personally, like not even for the shop, just personally. I did buy stuff for Wise Wolf, the fractional gold, but I wanted to tell your audience that's what I bought. Like I bought for myself personally. I saw what was I bought 1 gram gold bars in sheets. I bought 10th ounce gold pieces. I didn't go higher than that. I want tradable fractional gold, and I'm going to get it at a discount rate. And even if I'm paying a premium, it doesn't matter because the spot price on a long enough arc is going to eat that up. It's going to eat up that premium. I'm not worried about it. So like just money where my mouth is. It's funny. My son bought some product yesterday just at the shop, and he comes back here and he goes, Dad, look what I bought. And he had like a vintage angle hard gold bar. He's like, I've never seen this before. It was really old. We looked it up and it had like a collector's value. So I put that in my collection. I just was yesterday, I just put cash on the table and I bought as much as I could because these numbers don't make me not want to buy gold. They make me want to buy gold. And that's you got to get out of that mentality. Because I promise I've been in this business a long time. If we were in the reverse, if gold was going up, then my phone would be ringing. But it's funny how it goes quiet when gold is going down, right? It's just human nature. Like you got to break that pattern.
That's right.
If a Ferrari's on sale, why do you want to wait for it to go back up? Like if you're going to buy the car, it's just so funny to me. But that's just
it is the Ferrari effect, isn't it? I mean, if something is highly overpriced, you want to jump in on it.
Right. It's just human. Like you gotta break that cycle. And I'm guilty of it. I look at stuff. Oh, it's going down, and then I think, whoa. I gotta load up because I'm going to look back, a year from now and be really glad, or 2 years, and maybe it takes longer. It doesn't really matter to me because I know that currency that I'm trading out, that I'm taking those green pieces of paper and I'm trading those out. They're worth nothing. I give that psychological value, but I know that gold. I know that if I get a little 10th ounce Krugerrand, I'm doing pretty good. Long term.
Right. That's right. Absolutely is. Well, thank you so much for joining us, Tony. And again, I'll just remind everybody, if you go to davidknight.gold, Tony has set that up to let you know that you've come through us and let him know, I should say. And so I appreciate you doing that, Tony. Thank you for supporting the program. And it is an interesting time that we live in. It's the Chinese curse. But at this point in time, with the prices down on something and the fundamentals as we're looking at this, if you look at history, you look at the fundamental things that are there, I mean, it really does say sell. it is screaming sale.
It's true.
So thank you so much for joining us. Yes, it absolutely is on sale. Need to dust out the old commercial of Yukon Cornelius. Yeah, that's right.
That's right.
Yeah, he's got something to tell. He's screaming, it's on sale, it's on sale. The common man. They created Common Core to dumb down our children. They created Common Pass to track and control us. Their Commons Project to make sure the commoners own nothing. And the communist future. They see the common man as simple, unsophisticated, ordinary. But each of us has worth and dignity created in the image of God. That is what we have in common. That is what they want to take away. Their most powerful weapons are isolation, deception, intimidation. They desire to know everything about us while they hide everything from us. It's time to turn that around and expose what they want to hide. Please share the information and links you'll find at davidknightshow.com. Thank you for listening. Thank you for sharing. If you can't support us financially, please keep us in your prayers. davidknightshow.com.